Hey, what's up YouTube? Welcome to another episode on the Lazy Trader channel. My name is Steve. In this video, I'll be taking a look at a popular trading strategy, the famous MACD cross. But before I continue, I really want to give props to these two channels that inspired me to make this video. I'll leave their links in the description below. In case you didn't know, I like to test all my strategies by creating my own indicators and expert advisors for the MetaTrader platform. So if you want to access these bots, please let me know in the comments below. The nice thing about the strategy is that you only need two indicators, the MACD with its original settings and the 200 period EMA. These are the original two indicators required for the strategy. However, I'm going to add a 14 period RSI because I got better results in my backtesting with it. The strategy should work on any time frame, but I'll be working on the 15-minute for this example. The rules are fairly straightforward. For a long position, your entry will be when the MACD baseline crosses above the MACD signal line. The cross should take place below the zero MACD level. The lower, the better. In other words, the MACD lines should cross while under the histogram. Also, the RSI should be above the 50 level, indicating upward momentum. All of the above should occur while price is above the 200 period EMA. For a short position, the rules are exactly the same but reversed. Here are a few examples. According to the strategy, we should only be using a 1 to 1.5 risk-reward ratio. However, I have backtested other ratios and have got better results. I'll show you these results at the end of the video. As I've been explaining the strategy, I've been running a backtest in the background. I created an expert advisor that runs the strategy respecting all of its rules. Let's contemplate it running for a while. The backtest took place between the 1st of January 2020 and the 1st of January 2021, so a full year of backtesting. In my opinion, this will provide us a superior sample of trades, a lot better than typical 100 trades provided in other channels. Also, the trades are taken by a computer, so there is no emotion involved. This is the best way to prove if a strategy is good or bad. Now for the moment you've all been waiting for, the results. Unfortunately, and to my surprise, the strategy was not profitable in its original state. In fact, in a period of 1 year, we ended up losing over 82% of the account. As you can see right here, we lost $824.80. So what happened? Looks like we were profitable for a while, and then we just constantly went down. We had 44 consecutive wins against 69 consecutive losses. So really, there's no way for this strategy to be profitable unless we tweak it a bit. So why does this video say that I gained 800% on my account? Well, let me prove it to you. Take a look at these results. How is it that now I made $8,093 right here? How is it that the graph now is constantly going up At one point, we were at $22,600. Then we went down. But still, at the end of the period, we made over $8,000. We have 122 consecutive wins against 43 consecutive losses. So how did I do it? It was actually pretty easy. All I did was backtest a lot. And I found that adjusting the stop loss and the take profit, so a 2.5 to 2.5 risk reward ratio instead of the 1 to 1.5. That's all I did. I didn't change anything else. So hopefully you get a little golden nugget out of this result, because I know I did. Let me show you another result that looks a little bit more conservative. Now this graph might be a little bit more appealing to you. Granted that we didn't make that much money, but still, we did make 160% on the account. Because just in case you didn't notice, we were on a $1,000 account. So we made $1,600. The stop loss was 3 to 2.5. Now, this tweak does include a minor adjustment, and that's this setting right here, which is I called it the MACD extension. So what is the MACD extension? The strategy says that the cross has to be above the zero line or below the zero line. So the extension is how far from the zero line. That's the MACD extension. That's the name I gave it. So if you take a look at this part right here, from the zero, look at the values. So right there, that's 0.00050. Why is this so important? Well, it's simple. The further away you are from the zero line, I'm talking about the cross. The further away the cross happens, the less likely you're going to be mixed up in this entanglement right here. So it's a filter to keep you out of ranging markets. In other words, sideways markets. Let me show you this little adjustment in the indicator that I created. So if I just adjust this number to this number right here, 0.00001, that'll bring me closer to the zero line. Hence, I will get more arrows. On the other hand, if I go further away from the zero line, 0.00009, for example, I'm going to get a lot less arrows, but maybe better quality entries, like this one right here, or this one right here. Not every trade will be perfect, but a filter helps. And as you can see in these results, a 0.0002 gave me less trades. So in this case, I had 210 trades in a year versus 1,552 trades where we made $8,000 versus 1,429 trades with the original settings. So you're going to get a lot less trades, but you're going to get a lot less drawdown. Why is this good? Well, just imagine you had a $100,000 account and you had these results. You're going to be doubling your account in 1 year. More than doubling, actually. So there you go. For this video, I actually did 74 backtests where I tried different combinations to get the best result. So filtered by profit, we have the number one result at $8,093 at a 2.5, or this is more like a 1-to-1. So what is the 2.5? For the stop loss and take profit, I used an ATR. So this is a 2.5 times ATR versus a 2.5 times ATR in the opposite direction. This would be also a 1-to-1, but further away, 3 times and 3 times. And here we have the different MACD extensions. So take a screenshot of these results and test it for yourself. Now, if you're like me and you're lazy, that's why I'm called the lazy trader. It's not really because I'm lazy, I just like to optimize my time. I like to work hard just once. That's where I create the expert advisors, and then I test it with the backtester. So I invite you to create your own EAs. Also, you can create your own indicators. For example, like this one that gives me an arrow. So if I do decide to trade manually, I can get an alert when to get in. Now, I don't know how to code. That's why I use eabuilder.com. I'll leave the link in the description. That way you can build your own EAs and indicators without knowing how to code, and backtest all the strategies you find on YouTube. Now, if you learned something as I did, or if you have any questions about this strategy, please let me know in the comments. Also, if you want to see more content like this, please subscribe to this channel. It really helps out. Give it a like if you liked it. And if you want to know more about EA Builder, the links are all in the description. Take care. Until next time.